The winds of change are happening in Florida, folks, as 63% of loan officers at the end of 2022 did not renew their license to stay in the mortgage business. At the same time, 75,000 realtors mass exit the business. Florida has been buoyed by positive news of people moving here in droves, but we are now starting to see some interesting trends that are showing the signs that Florida itself is not impervious to some of the corrections that are taking place in the West. My name is Jared Jones, real estate expert based in Central Florida, and as always, bringing you the top Florida housing update on the interwebs. But as I jump into this update, do me a huge favor, smash that like button and subscribe to the channel for cutting edge market analysis, real estate news, and random punditry. Now to the update. All right, folks, a lot of news to cover, so let's stay on track. Number one, mortgage rates. Check this out. This is the 30-year fixed. We see this line right here on the left side of my screen is currently 7.03. Just broke the 7% mark, folks. If you look down here, it shows you a little graph of where we've been. If you look right here, we had a spike going into November of last year where interest rates peaked at the top right around 7.3% was the final max for the 30-year fixed. You'll notice from November all the way into January, man, everybody got pumped because we finally got down to 6%. I think we even hit 5.9% for a single day. And look at this, folks, right up to now knocking on 7%, and we're over it. Take a look at the line here for 30-year fixed. You got 7.03. Over 1 month ago, it's now 0.58%. The 15-year fixed is nearly 1% higher than it was just a month ago. Look at this too. So we're at 7.03%. The high going back this entire run up of interest rate for the last year, 7.37, folks. I think we're going to blow that away. Been super interested the last 3 months. I was excited that, interest rates were low, so it was definitely driving sales. You saw this market where buyers were really kind of pulling back and they weren't doing a whole lot. And the interest rate getting down to 6% was helping in a lot of ways, as all the cash buyer activity, which represented 30-40% of all the buying public, had just left the market. Open Door losing a ton of money. They're leaving the market. A bunch of, Wall Street buyers have gone. And when that happens, a lot of the buyers aren't there anymore. And that is exciting for some, but the reality is interest rates at where they are now, they're at 7%, is absolutely stalled out the market. It's going to have an impact. It has happened overnight. This is anecdotal, but I'll tell you this, January, we're having a lot more conversations with people excited about buying. And that conversation in the past 30 days has already started to flip as interest rates have got higher. And it looks like Jerome Powell is already changing his tune. People that thought he was going to pivot soon, the interest rates were going to get really low. That talk has been squashed. He himself has been coming out saying we're going to have to press on. Rates are going to get higher than we imagined. And so here we are, folks. Some of the other news I'm going to show you recently, Florida attracts more ultra wealthy movers, more than in any other state. And then it says between 2012 and 2022, the millionaire growth was over 70%. And again, most folks, nobody cares that Florida attracted the most millionaires. Millionaires represent the 1%, which means, they're only buying a very small fraction of the houses that we're even concerned about. We point out the wealthy, but Florida has actually been attractive for all kinds of classes of people to move here. And it's absolutely been squeezing all of the marketplaces, not just the major metro areas that we're going to cover today, like Tampa, Jacksonville, Miami, but also the outlying areas near those are seeing rents in some of the outer areas, like the rural areas that are 20, 30 minutes out of Tampa, out of Orlando, seeing these 20, 30% rent push in a single year just because it's so unaffordable in the major cities and it's gotten ballooned so fast. So what will happen? Let's take a look at what is happening. U.S. housing market posts a $2.3 trillion drop, the biggest since 2008. And again, we're not talking about the national economy per se, but it is interesting. After peaking in June at 47.7 trillion, total value of U.S. homes has declined by $2.3 trillion, or 4.9% in the second half of 2022, according to Redfin. Listen, folks, and again, this isn't the topic of conversation for this particular video, but one thing to note is that the amount and the velocity of the price change since the peak of this run up in price is higher than the 2008 market crash. So the pace of 6, 7, 8 months after the peak of the previous market bubble, which 2008 was the largest bubble of all time. Out of 2-3 major market crashes that we've seen, we are now in this market conversion, correction, shifting at a higher pace than back in 2008. Again, that's not the topic of conversation I want to make here, but it is an interesting topic. I want to zoom down in this particular article. It talks about how Florida is gaining ground. Let's check it out. Florida gains. How much homeowners lost depends on where they bought. Biggest declines were in pricey cities like San Francisco, New York, while buyers who moved to pandemic boom towns are still seeing returns on their investment, particularly in Florida. This is true in Miami, where the value of homes ballooned over 20% year over year to $468.5 billion, the largest annual increase among the top metro areas. While all markets are down, Miami has about the same values when it peaked, okay? Now, I will tell you this. Even though they're saying that Florida has been fine, has been flat since the market tipped over in June of last year, and most of these marketplaces have lost 4, 5, 6, 8% in some of the Western markets, that Florida's held its own. Well, that's not altogether true. There has been some medium price loss in marketplaces throughout Florida. You're going to see some of those today, and we're going to dive into Tampa here first. But I think it's very important to say, it's not a secret that Miami has held its own in terms of its price, but can it continue? That's the question. We're going to seek to turn over some of those answers as we take a deep dive. But let's start in Tampa. The data I'm going to show you is a buy versus rent calculator. I'm going to explain some of this as we go through the first city, and I'm not going to explain it when we go through future markets. But one of the things that we can see as an indicator of how far prices can correct is how much different it is for you to purchase a home versus renting it. Now, for sake of comparison, I'm going to show you the Phoenix marketplace. Now, Phoenix market, you can see the red line here shows the run up in home price and mortgage that caused the actual cost to buy a home from a mortgage payment standpoint to be about $2,700 where it stands today. Well, then rents peaked around $2,000. They didn't quite get there, and then they kind of troughed about $1,858. They've lost some grounds. They've dropped a little bit. The point is there's a big deficit between what it takes to service a mortgage to own a home versus what it takes to rent. And you'd say, hey, where does the cost come from? Well, the buying cost assumes a purchase made with a 13% down payment at a 6.2% mortgage rate, folks. So this is a cost analysis source, data pulled in from the Census Bureau and from Zillow to build a pretty good graph that we can rely upon. The only thing about this graph is now mortgages are not 6.2% as they were 3-4 weeks ago when this graph was compiled. So unfortunately, the gap to own a home just got worse, which is why I tell you folks, if you see mortgages go up, if you see interest rates climb, that is a de facto price reduction for the sake of the chart I'm pointing out to you right now. De facto price reduction, because what happened is now in Phoenix, it's not $2,700 more anymore. It's $2,800, $2,900. It climbed back up and it now has gapped, whereas rents are still here. Rents did not climb because interest rates rose. There's now a bigger gap, which means it puts downward pressure on those house prices to get them closer to our rents. Why? Because the market is going to walk away and rent instead when the gap is too big. And this particular deficit is 41.9%. So keep that in mind. But let's get started with Tampa, Florida, folks. Take a look at this. As I mentioned before, you now have this chart more than likely. This is probably still back at the peak around $2,400 a month because the interest rates have risen since this graph was compiled. And the rent deficit is probably closer to $400 or $500. It's not massive, folks. It's not massive. Tampa is definitely better off than a lot of other marketplaces. However, I do think a lot of locals are struggling with this. Look at this rent appreciation. So one of the things we're going to get from this also is the data from rent is $2,087 a month. Now look at this. Back in 2020, we can go back early, mid 2020. Back in March, right before the pandemic kind of took hold, $1,430 a month. It's like a 34% climb. Again, folks, that is a balloon, a bubble, whatever you want to call it in rents. No different than what we're seeing here in the price point. It's just crazy. Take a look at this year over year inventory, folks. You can see right here that Tampa's inventory went off the floor and started to come towards its normal balance. Okay, so Tampa, if you look over here, the years past, this is going back 5 years. Tampa was running around 14,000 in inventory. And when the marketplace started to get close to that, it starts to reach 11,000 homes. It then started to tip a little bit as interest rates really got low. I expect, unfortunately, though, you're going to start to see some of this climb again. Spring market's going to put more homes in the market. If interest rates stay high, and they likely will be, you are going to see this thing climb a little bit higher. With that being said, you are probably going to see price cuts climb. Whereas right now, obviously, they're dropping. They're dropping because interest rates were low. So the reality is we had peaks back here where 40% of the marketplace was cutting prices in order to sell. Very, very high numbers in Tampa, but you saw it to shift a little bit. I expect you're going to see this start to come back as people can no longer afford to wait to sell their home. They're going to have to cut prices in order to draw attention to their house. Now, let's take a look at Redfin. I'm going to show you a few different data points for Tampa that are key. Look at this. This is a multi-year graph going back to 2020. The red line right here, the yellow line is 2021, and then we have back in 2022. Now, the graph we're looking at right now is the sale to asking ratio, average sale to list ratio. This is the percentage that homeowners have to negotiate off their price in order to get out of it. Now you can see it ballooned last year. So it went way, way, way up. And look, it just absolutely fell off a cliff to a multi-year low. Now, folks, when you start to see this kind of activity, and we're seeing it throughout the Central Florida marketplace as well, not just in Tampa, sellers are having to give more than ever before to get out of their homes. Anytime we see reason, now it's coming off the floor a little bit, but remember, interest rates are climbing as these graphs are being built. Sellers are going to have to soften their pockets. They're going to start giving back in order to get out of the listings. But look at this, new listings. Look what sellers are doing. They're saying, nope, not bringing my house to the market right now. Pending sales. Obviously, there's less to turn over. There's less selling. Homes sold way, way down. I'm seeing a lot of markets across Central Florida are seeing ridiculously low amount of inventory. It is insane, folks. Like one of the stats that we've now seen in the realtors board is that there's fewer sales per realtor than in history. It's around one sale per agent or two sales per agent. It's very, very low number, which means that it is harder to earn a living as a real estate agent. It's like owning a grocery store with nothing on the shelves to sell. The reality is, folks on the other side of the screen, you're watching these videos, you're saying, it must be really nice being a realtor with all these high prices. And I'm going, yeah, well, it'd be great if you had volume in the lower prices. It's not great for realtors right now. In fact, it's not, it's bad. 75,000 jumped out of the business, as I mentioned earlier, in about 2 to 3 months. It is a shifting landscape, folks. Take a look at this. This is homes sold, again, multi-year low. Months of supply is shifting a little bit, but this is still high, folks. Months of supply. So you have very low inventory, yet the supply of homes is just not moving. When it's not moving, you're going to have this take place. So months of supply literally just grew and grew and grew. Like into last year, it just went up and it spiked. It's a good sign that it tipped because beginning of the year, it was just going vertical. And then, it's obviously changed pace. But again, I expect you're going to see this probably start going north again. But we'll see what happens. Check out the median sale price. This is the interesting part. Look at this. Last year, price peaked all multiple years. Look at this. 2020, way down here. Okay. Summer of 2020, 252,000. Summer of 2022, $394,000. Oh my gosh. Insane, folks. That is nuts. 255,000 to almost 400K, 150,000. I need a calculator, but that's a lot. Okay. It's like what, 60%, 70? I don't even know. It's a lot. But look at this. Okay. So they peak at 394, somewhere around there. Today it's 365,000. So it's down $30,000. Okay. That's what, 8-9% gone already. Okay. Because if you were to continue this line, it's gone down, 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 and it's now sideways here. Notice the current vibe in Tampa, flat. Okay. You look at a 1-2 month mark of just this snapshot, and you look at everything else, it's flat, right? Will that hold? I don't know. I think you're going to see Tampa, if the interest rates stay high, roll in the spring again and be gapped, where they're going to start making news going, oh, the year over year is way under last year. And I know all of you are going to make the obvious commentary down below in the comments that, hey, Jared, if they're here, they're still way over this. And you're right. I mean, in all reality, a normal marketplace, the prices are maybe somewhere, this is 2020. Maybe 2021 it's here, 2022 it's here. It's like up 10, 12% in 2.5 years. This is ridiculous. Gosh, folks, tell me that's not a bubble. It's not a bubble, right? It's not a bubble. It's completely normal. Don't worry about anything. We're good. All right. All right, folks, Jacksonville, Florida, take a look at this. You've got a little bit of a drift down again in the amount of mortgage. This is buying versus rent calculator. You can see the gap is 1,700 versus 2,200 to own. It's a 28.7% difference. That gap is now larger, folks. That's probably more like 35, 40%, because as I mentioned, interest rates rose. That is a big, big difference. So I expect the price is going to take a hit in Jacksonville between the interest rate and between renters just saying, nope, I'm going to rent. Rents are obviously softening. You saw rents climb out from around $1,250 a month towards the beginning of the pandemic to now being almost $1,800 a month. They are fortunately softer from the peak, and it looks like they're slowing down, so that's good news. Look at the price cuts in Jacksonville. Price cuts hit 34%. You'll remember in Tampa, they're around 39% at the peak. They've softened up to around 25% of all listings have a price cut to sell. 1 out of 4. Very high number, but I also think you are going to see that happen again. Inventory levels in Jacksonville. Again, you're going to see this throughout Florida, folks. You're going to see that as the interest rate dropped, they had a lot of inventory was spiking and then it lost air. And folks, when it does this, this creates anything down here is more towards a seller's market. Anything you see towards like this really whitish line going into blue, that's when a seller has control. So momentarily, sellers have control. When this happens, you're also going to see the pace of price reductions slow down throughout the state. In Florida, I got to say, the sellers in Florida are stubborn as it is until there's absolutely some major changes in economic pain. You see Jerome Powell really put the lead out on raising interest rates, and you actually see it affect the housing market. In Florida, you're just not seeing the shift in pricing just yet. If anything, I think you're going to be able to say that pricing is very flat. So let's take a look at the actual data across and a deep dive across several factors inside of the Redfin model for a several year look at Jacksonville. New home listings on the floor, multi-year low, no surprise there. You have this happening throughout Florida where people are just not listing their homes. They're choosing not to put it out there. Your active listings, again, just staggering. They're not selling, but they're sitting there. Months of supply, again, very similar to Tampa, where you saw this line of last year where it just took longer and longer to sell because buyers weren't engaging the market. And while new listings aren't hitting, you have record high. You have months of supply. You have actual more inventory sitting around just because buyers aren't engaging, not because people are listing them. Not a good sign, folks, but it is obviously moving down. You can see it off the peak, and we'll see what happens. Look at the average sale to list price ratio. This is insane. This is the ratio that sellers have to negotiate to get out of their house. Look what happened last year, folks. It was up, it was up, it was up. It hit the floor, vertical. Sellers were like, here, take my house, take my kids, take my cat. Just get me out of my house. And I can guarantee you 96 and change percent. This sounds like a lot, folks, but when you start getting into the 96% territory, you have a whole lot of people giving a lot of money up to sell. This, more than likely in Jacksonville, is a very historic number, meaning they don't see this level of negotiation very often. It's probably seen a handful of times over this period of time. Take a look at median sale price. So you had it climb to the peak. Look at where it is now, folks. 341,000 in Jacksonville. It's a 1% over last year number. We're close in Jacksonville. Again, this is on strong interest rate data that this is being produced. Wait till Jacksonville is on the back of a 7% plus interest rate, folks. I think you're gonna see it like this. You're going to see it well beneath last year. You're going to start to see some year over year data that's going to be really yucky. It's going to be written well too. You know, news loves to report, you know, year over year is down 10% because it right here, when you get to this peak, in all likelihood, the year over year gap is going to be atrocious. But take a look at this. So year over year, you had your peak somewhere in the end of June, 382,000, folks. It's now 341,000. 40 grand came out of the marketplace. That's like 8% downward shift. Okay. So talking about the trillions that came out of the economy, this is what I'm talking about. Florida, you know, they said, oh, Florida made all these gains. Well, maybe the trillions are still available in the Miami economy, or the billions, I should say, is still available in the equity there, but not in Jacksonville. Hi, Poppy. We are in Miami, where it is expensive to do anything. Here we go, folks. Buy versus rent. Look at this. Out of control rent. Holy crap. This is one of the highest rent appreciations in the entire country, folks. There isn't a rent roller coaster ride like the one you see on your screen that's trending with buying. Oh, man. I feel for the poor middle class in Miami. You folks are probably living in boxes. This is sad. Okay, check this out. So going back to 2020, you had a $1,800 a month rent, which was high. That was high back then. And it's gone up to $2,763. It's gone up like $1,000 a month in a short period of time. And then you had purchases. Obviously, for a very, very long time, you could own a home far cheaper than renting. And now renting is gapping that. And honestly, Miami, it is expensive to rent. It is expensive to own. There's not a story to tell other than that. But let's check it out. Inventory year over year in Miami. This is why Miami is staying strong, folks. All the zip codes in Miami have no inventory. Seller's market, it was at the heat, and it's still there. It did not climb out of the hole. It doesn't have anywhere near enough inventory to slow it down. More than likely, you're going to see price cuts on the floor as well. Yep. So price cuts are below 1 in 5. It's like 1 in 6. That is just not much. Okay. Miami's still ridiculous and out of control. Okay. It is what it is. All right. Check this out. No inventory. No inventory coming. Sellers are not putting their house on the market in Miami. Homes sold. Let's take a look at this. Oof. Look at the homes sold, folks. Going through last year. Look at it. Down, 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 down. Just multi-year slam at the end of 2022. Volume is not there. Like, I mean, there's not volume being turned over. It's multi-year low. 428 homes sold. That is just going to be bad all the way around. And there's no inventory. There's no inventory. It's probably still a multiple offer war on any of the houses there. Let's look at median sale price, see how it's doing. Insane. Look at that. The median sale price is over the June peak still. Wow. Look at that. Folks, you can go all over the country. You don't see this. Nowhere. You see the New Year line for 2023 is hugging or beneath last year, not gapping it by like whatever this is, 10% over last year still. Wow. All right. Correction hasn't come to Miami, folks. Look at this. The peak last year, 490,000. It is currently 489,000. So it's virtually neck and neck with the peak of last year. Miami has no idea what the rest of the world's facing right now, and they're doing it their own way. Insane. All right, let's look at average list price to sale. Oof. So it has some correction. It's still not a multi-year low, though. This, again, is how much sellers are having to give away and negotiate to get out of their home sales. It peaked in the summer of last year like everybody else, and it did take a vertical plummet to where the multiple offer ride ended. Okay, so it really kind of peaked at about 98, 99%, and now it flattened out at the beginning of the year, and it's, I don't know, folks, that's low. That's a low number, but I guess Miami historically goes down to 95, 96%. And I don't know, maybe people list these condos on the beach there at, $500,000 higher than they really are going to sell for, and then they just give it back and negotiate it down. I don't know. It's a different market. It is really bizarre to see such low inventory and such low price reductions for the sellers there to be giving up so much. I mean, this is a big number. This is probably the highest amount a seller gives back that you're going to see in all of these marketplaces. All right, folks, let's take a look at Orlando, the city beautiful. Check this out. Again, you cannot count on this. This is going to be higher now. The average purchase price for a home is probably closer to $2,500 again, and rents are down around $2,000. The gap's probably closer to 25%, which is not ridiculous. Again, there's a lot of other correcting markets where the gap is much farther, but it is still cheaper to rent at this point, probably $600 a month cheaper. So that's where we are right now. Rent in Orlando is $2,000 a month average across the board. And we had back in 2020, we came off of a $1,450 a month ish type average to where we are now. So rents are up probably 35%. And again, something I kind of mentioned is a lot of the metro areas around Orlando, around Tampa, these are the outskirt rural areas. They are seeing their rents explode. I saw a stat on Lakeland, Florida in the last year, up 25-30% year over year. That is nuts, folks. The number itself is enormous, but you got to consider that the number is enormous while all the other rental markets around the country are correcting. So all the other year over year numbers for so many cities, they're flat. They're up 1%. They're up 2%. They're down 3%. They're very much around zero, okay? Where renters are finally relieved. They're not getting cuts on their rent. I mean, the landlord's not calling them reducing the rent around the country, but they are saying, hey, guess what? We're not going to raise your rent this year. And the person's like, well, that's great because you raised it $500 last year. The reality is there's a lot of these small marketplaces throughout Florida where they're the outskirt next town over. So you have Orlando at maybe $2,000 a month. You have Tampa at $1,800 a month. In those circumstances, those outside rural areas are like $1,300, $1,400 a month and just now hitting the wall. I mean, just going through the roof in their rents. But let's take a look at inventory here in Orlando. Inventory versus price cuts. Price cuts you can see are way, way down. They peaked at 30%. They've absolutely plummeted from the fall winter months to now being 1 in 5, seeing a price cut. Inventory is aging here, but sellers are stubborn, super stubborn, flat pricing. They're not moving them. But look, this is why, folks. You had inventory come off the floor. It never really got all the way back up, and then it's dropping. So coming into the beginning of this year, low interest rates drove a lot of sales, dropped inventory even further. Sellers stopped cutting prices. That's the facts. And a whole lot of sellers have overpriced junk on our marketplace. I see it every day. No offense to you that have the overpriced junk on our market, but a lot of it, you have it sitting out there. You think the marketplace is coming back to you magically to where it was last June, and it's not. And you're not reducing the price, and it's going to sit there, become ancient, and you're eventually going to reduce, or you'll take it off the market. And that's kind of what we're seeing across many markets in Central Florida. Look at this. New listings sliding sideways. People aren't bringing their house to the market. Median sales in Orlando, check this out. Climbing last year. We peaked around 400 to 1,000. We slid down to where we actually lost all the way down to 375. Again, not a huge dip, but we're now at 382,000 across the board. Again, depending on what you look at, this is showing a 5% price loss. I've seen graphs 5 to 7% if you just take the actual 4 or 5 county area around Orlando. This is probably a very large market segment, but we've seen a 5% price correction, 6%, depending on what you're looking at, which is common. That's what you're seeing in the news. When you see these articles about $1 trillion coming out of the economy, average, marketplaces lost 4.5% in their price since the peak. And that's kind of what Orlando has done. How about that months of supply, folks? Last year, the amount of buyers pulling out of the marketplace drove up a meager low listing volume and allowed it to age slowly because units sold went so stinking low. Look at this. But it rebounded. So like at the beginning of last year, you had a lot of buyers return back to the market and it killed the months of supply and just brought it back down. I don't think it's going to stay there, but it is exciting to look at the moment. This is what I'm saying, by the way, with regards to months of supply. What drove that is, look, towards the end of last year, we had things fall off a cliff. For the 4 counties in the Orlando area, we had sales around 1,300 total units in the month of January alone, folks. That is the lowest amount of homes sold in the Orlando metro area since February of 2009. It is, I'm telling you, a 10 plus multi-year low. The volume, okay? It doesn't matter that there are actually very low listings. The buyers have pulled way back. And again, they did re-engage as interest rates went to 6%. It gave the market a breather. It allowed some of the inventory that was sitting there to be pulled off. But I am telling you, it'll be interesting to see what happens. This spring back of sales, will it hold? Because if it doesn't, you are going to see sellers jockeying to get out of the market later this year. And it will be very, very interesting to see what happens to price in the Orlando metro area. But right now, that volume change, the increase in sales, a lot of the inventory coming off, it shifted from a balanced market where it was momentarily for about 2 or 3 months to now seller favored. So it was like you have seller favored, it's a war. Buyers are trying to get the best houses. Balanced market means buyers and sellers have kind of an even trading field. Neither party has an advantage. And then a full-on buyer's markets, when there's a lot of supply sitting around, buyers can negotiate whatever they want. Take a look at this. Last graph we're going to look at. Average sale to asking. Look at this. Plummeted in Orlando. So it peaked way off the charts. Over 101% to value of what sellers are asking they were getting. So the average person got over asking for a series of time, and then it just fell off a cliff. Multi-year low where it started the year. And by the way, folks, in January, which is one of the most recent graphs I looked at, that's not in this chart, but if you go back here, this number fell to like 96% in the 4-county area of the metro Orlando area. That was the lowest percentage that sellers were getting versus asking in 3 years. So it was like a 3-year low. And that mark was so low, it has only been struck 4 times in 6 years. So it's a very, very low number. Sellers were actually having to very much negotiate their way out of their sale to get their home sold. The fact you've listened to this very end, I know you're a diehard channel fan, so do me a favor if you haven't already, smash that like button. And obviously you are likely a subscriber, but the off chance you're not, subscribe to the channel, hit the bell icon so you are aware of the next updates. And we'll talk to you in the next one. Thanks for watching.